Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to Tax Smarts Unlocked. I'm David Robson, and today's episode is called Smart Machine Dumb Advice: What AI Still Gets Wrong About Your Taxes. Let me kick us off with a blunt question. AI can pass the CPA exam, the bar exam, and probably your high school calculus test. So should you just ask ChatGPT to do your taxes this year? I'll let that hang for a second, because the real issue is not the test score. It's the test you are living. Your job, your family, your business, your risk tolerance, your cash flow, and your goals do not look like anyone else's, and the tax code reacts to all of that. Today we're going to sort out where AI is genuinely helpful, where it hits a hard wall, and how to use it without getting yourself in trouble or leaving money on the table. Let's talk about what that question is really asking. We are not choosing between magic robot accountant and dusty human with a calculator. We are asking whether raw information is enough to make good tax decisions. AI is a remarkable research engine. It can scan thousands of pages of code and cases in seconds, summarize rules, and even translate jargon into plain English. I'm not here to fear it or dismiss it. In my practice, we already use AI to speed research and to sanity check technical points. The problem is not what AI knows. The problem is what it cannot know about you without deep context, clarifying questions, and professional skepticism. Taxes are a personal puzzle, and the picture on the box is your life, not a library of deductions. First, where AI truly shines. Imagine you are a freelancer who just switched from a W-2 job. You ask, what can I deduct? In seconds, AI can generate a solid inventory. Home office rules, mileage versus actual auto expenses, phone and internet allocation, retirement plan options like SEP or solo 401k, health insurance premiums, the qualified business income deduction, and more. If you are a landlord, it can pull up depreciation rules, passive activity limits, cost segregation basics, and the vacation home day counts that trip people up. If you own an S corporation, it will remind you about reasonable compensation and accountable plans. That's valuable. It saves time, sparks ideas, and levels the playing field for taxpayers who do not know what they do not know. But there is a canyon between knowledge and understanding. Knowledge is having a list of every strategy a real estate investor could theoretically use. Understanding is knowing which three belong to you this year, given your income, entity structure, passive versus non-passive status, other investments, debt load, and what actually happened in your books. AI can hand you a beautiful menu. It cannot order the meal, tell you about the ingredients you are allergic to, or stop you from pairing hot sauce with vanilla ice cream. A strategy that sits on a list is not a strategy. It is only information until somebody weighs trade-offs, models taxes and cash flow, and builds the calendar of actions, documents, and checks you need to write to make it real and defensible. Let me show you with a case study. A listener, we will call her Maya, owns 2 long-term rentals and a consulting LLC. She asked an AI tool how to save on taxes. It returned a buffet, claim real estate professional status, do a cost seg with 100% bonus, set up an S-corp for the consulting, write off a home office, hire her teenage son, and open a solo 401k. All technically possible, but here is what understanding sounds like. Maya's rentals are long-term, self-managed only part of the year, and her consulting already consumes more than 1,000 hours. If she chases real estate professional status, she could fail the tests and turn a routine return into an audit magnet. A cost seg could be powerful, but she has passive loss limits and modest W-2 wages from her spouse, so timing matters. We modeled whether electing real estate professional status next year, after converting one property to short-term with material participation, would unlock those losses. We also checked whether the S-corp salary would reduce her QBI deduction. The final plan? No S-corp this year. Instead, increase retirement contributions, convert 1 unit to short-term with tight time logs, and schedule a cost seg when cash flow supports it. Same menu, different meal. Implementation is where tax savings actually happen, and it is full of booby traps. Timing alone can make or break a strategy. Do you place the asset in service before year-end or after? Do you elect S corporation status effective January 1st or mid-year? Do you prepay expenses, or will that trigger a limitation? Then there is entity structure. Changing to an S Corp sounds simple until you run payroll, maintain reasonable compensation support, reimburse expenses through an accountable plan, and file state registrations. Bookkeeping has to align mileage logs, time logs for material participation, contemporaneous home office measurements, board minutes, and receipts that match bank data. Sequencing matters too. You cannot claim certain credits if you also take accelerated depreciation on the same items. You cannot fix a missing W-9 or a late 1099 after the IRS sends a notice without extra cost and stress. This is why an ongoing relationship with a professional is irreplaceable. We build the checklist, coach your team, and course correct before the return is due. Now let's talk about the other hard wall for AI, representation. AI cannot sit across the table from an IRS agent. It cannot respond to a notice, negotiate a penalty abatement, or defend why your documentation proves material participation. Last spring, a small contractor came to us with a CP2000 notice alleging unreported income and disallowing vehicle deductions. He had used an AI tool to assemble his return, then a low-cost software to file. The tool gave plausible language about mileage, but he had no log, and his 1099s were mismatched to the EIN of a dormant LLC. We amended the return, reconstructed mileage with third-party records, matched deposits to invoices, obtained missing W-9s, and prepared a narrative that anticipated the agent's questions. We also fixed the entity issue and elected S-Corp status prospectively with a payroll plan. The result was a reduced assessment and no penalties. Could AI list steps like those? Yes. Could it parse messy bank activity, call vendors, and stand behind the explanation? No. When the letter arrives, you want a human who already knows your file, your history, and your documentation, not a chatbot window and a shrug. So where does AI fit? Right in the toolkit. I use it to stay current on code changes, to speed first-pass research, and to explore unfamiliar territory before I crack open primary sources. You can use it the same way. Ask it for a list of potential deductions for your industry, for plain English explanations of rules you keep hearing about, or for a comparison of retirement plan options. Treat the output like a brainstorming whiteboard, not a signed plan. Bring that list to your preparer or planner and say, which of these are real for me, and what would it take to implement them correctly? The toolkit still needs a craftsman. A saw does not build a cabinet, a pro does. AI can make the pro faster, but it cannot replace judgment, experience, or accountability when something breaks. If you remember nothing else, using AI to search for tax-saving ideas is not a bad thing. Just do not stop there. Let's make this practical. Think of planning as a year-round habit, not a March or October fire drill. In Q1, pick your entity review. Are you in the right structure for liability, payroll, and QBI? In Q2, tighten bookkeeping, set up an accountable plan, and document home office and mileage. In Q3, mid-year projection. Do we accelerate equipment, adjust estimated taxes, or stack retirement contributions? In Q4, lock timing decisions, place assets in service, prepay where allowed, and finalize reasonable compensation. Throughout the year, capture documentation as you go. If you like AI, use it as a research partner to surface options before each checkpoint. Then sit down with a pro who knows your numbers and your goals to design the moves. That's our show. Today we separated information from implementation, celebrated what AI does well, and drew a clear line around what only a seasoned human can deliver: context, sequencing, documentation, and defense. Use AI to discover ideas and to learn the language of the code. Then partner with a professional to fit strategies to your life and execute them correctly. If you felt that mix of hope and dread when you opened last year's tax bill, take the next step. Reach out, start a planning conversation, and give yourself a calmer tax year. I'm David Robson, and this is Tax Smarts Unlocked. Thanks for listening.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.